Welcome to the club. My name is John, and I will be your host for this meeting. In this meeting, we want to talk about investment or market fluctuations. So, the first 3 months of this year have passed, um, which equals one quarter. And with the new president in office for his first 3 months, he has come up with a number of initiatives that has the market a little on the jittery side. We know that the monster in the room from inflation is still around. Interest rates are still holding at close to 4%. So if you're investing in money market CDs or your treasury bonds or notes, you're still getting a decent little return. And the market has taken a little dip, um, right around anywhere from 5 to maybe up to 11%, depending on what your investment mix is. So, with that said, I wanted to just talk to you about um, my views on that. So, over the last 5 years, as someone who has been investing regularly on a monthly basis for their retirement, we've seen how events or the economy can affect the markets. When we had the shutdown in mid-March of 2020, we took a major and very, very fast drop in the market. And after that, it recovered, and it recovered very well over the next uh, nearly almost 2 years, all the way up until Russia invaded Ukraine. And then after that, the market just slid and slid until it hit its peak in September of 2022. And then it started to come back and has been coming back. So we have benefit from it. We did have a drop in August of 2024, that 1 week where we lost about 3 to maybe 7%. But all that means is that your investments were on sale. So if you've been investing regularly, don't worry about it. Just keep doing what you're doing and continue to put your money in your equities if you're trying to build up that retirement nest egg. Now, in my case, I had been investing regularly. I managed to scrape together a few $1,000s at the end of 2021, and I put 5 grand into a Roth IRA. I had already got it started, and at least one Roth IRA, because all you need to have is one. And I started in 2019. So I started another one, and I started pumping money into two investments, which we both covered those in the retiring club under the prospectuses and how to find a fund. And my favorite is MDFOX. It's holding up pretty well. It's at about $7 a share, and that contains six of the seven investments that make up the Magnificent Seven. So I continue to invest in 2022, and by the end of the year, I had saw that I had put a significant amount of money. I think it was about uh, $4,600 or something in that particular year. But it had did so bad with the investments in the 401k, a total of $14,000 of investing had only the counts only rose by 5 grand. So $9,000 of that money was gone. So what I did was when we went into uh, the year would have been 2023, I had shifted to money markets, and I went with the BlackRock uh, short-term government notes, and that was the investment that I had picked. And I also had uh, switched over to VO Bank, where I was getting about 5.5%. And I started pumping money into the money market as well as the short-term notes in my 401k. The money market outside of the 401k was to pay off my house. So I've been putting 5 grand in. I'm actually starting, this would be year number 3 of pumping money into that. So since I've been doing that after 2022, I let the equities just ride. I've been putting it in because we have been getting a solid 4% over the last 3 years. So when the market went down this first quarter, I was still making money and I had cash to draw on if need be by having my money in the short term notes over in the 401k as well as another IRA. And then there's cash going into these money markets at the online bank. So I'm showing gains of interest on those investments as well as over at Fidelity and Charles Schwab with their money market accounts. So I did that because I could not take the losses in 2022. $14,000, only account raises by five, 9,000 gone. It were just losses. However, in our retiring club, I've been talking about the ticker symbols and how you can follow your investments and how you can look at the charts to see how the investments are doing. What I discovered is that after 2022, these investments that I stopped putting money in, they actually clawed back from their 30% loss to zero. And then they moved forward by another 40% in some cases for an average of about 60% gains. So what that means is since I watch these investments, if we have cumulative losses, and what I mean by cumulative losses, in the month of March, we were off by five, maybe 7%, cumulative maybe about 10% for the first quarter. If those losses continue month to month, we're going to get hammered in our equities. However, the investments that I watch claw back are going to be deeply discounted, and I will actually start diverting money into the equities. I will just stop all of a sudden. I'll track what I'm putting in there, what normally would go into the money markets. I'll shift it over there and I'll take the money out later when it has those massive gains. So that's what I'm doing to help protect myself. I'm 5 years out from retirement. I don't see any reason to continue pumping cash into the equities unless they're deeply, deeply discounted. So that's what I'm going to be looking for over the next couple months. And what we have to do as investors is keep our eye out for the cumulative losses. The cumulative losses will come back eventually. If we have massive losses and you think you might need the money, you may want to divert some of the money into the money markets, which is what I've been doing for the last 3 years. And not only have I did that, I said, well, hey, wait a minute. Let's put $100 towards the principal on the mortgage and get that paid down. So I'm in my third year of doing that. So these are all steps that you can take when you see the market fluctuations. For the most part, you want to just keep investing in your retirement accounts, specifically the equities in the 401k. Just keep the money going in, just like you always have. Don't worry about the losses. They will claw back and actually grow. If you think that you may experience a job loss or have a need for money, you can always divert the money that you're putting in the 401k. You can find a money market or in the Roth or outside of your regular retirement accounts and just put in an online bank and collect some of the fixed income. So the fixed incomes are paying out right now where the equities are actually going down a little bit, but it's nothing to worry. We want to keep our eyes out for the cumulative loss that build up month after month. So if we got a 5% loss on some of our investments already, and we get another 5%, and then another 5%, and then a three, then a two, those are all your cumulative losses. And that's when um, you really want to start buying more shares. In my case, this time around, and the only reason I'm doing it is because of the information I've been giving you as far as tracking the ticker symbols, looking up the mutual funds, reading the prospectus, and looking at those charts. I will divert it because I saw 70% gains in some of the investments where I had stopped buying the shares and I moved over to money market. This time around, I'm going to get some of that money. So this is what I got for you on this meeting. And what I'm going to start doing is I'm going to start featuring some of the other content creators here on YouTube so that you can have someone else or look at and research the subjects that are important to you as an investor. So I'm going to stop this presentation here and switch into a screen share. And I'm going to feature someone that I think is worthwhile you taking a look at. Okay. My name is John, and I'll be right back with you. Okay. So, our featured content creator is going to be your rich auntie. Robin is a certified financial planner and wealth advisor. She deals with high network and ultra high network clients. These are where clients like your athletes getting those $1 million, 30 and $40 million contracts, and actors and doctors, and could be anybody. Um, but anyway, her name is Robin, and her presentations are basically developed for those people who need financial literacy, similar to what we're trying to do here with the retiring club, where we're talking about basic investments 101 and how to get started. She's got a whole library of videos on various topics like the 401k, the Roth. She covers the limits. You listen to one of her videos, you'll see why a 401k is going to allow you to put more money in versus a Roth. Covers tax advantages. Most recently, she was talking about um, the need to examine the laws related to your money when it comes to your relationships, specifically talking about divorce. And she hammered in on something that I have been talking about when it comes to keeping those statements, where you need to have those statements around, because if you don't have them, and after 7 years, and you need these financial service companies to go produce them, they're going to charge you, and they're going to charge you a lot, like $30 per statement. And if you need years and years of those, or if they can't find them, you're going to be out of luck. But your rich auntie, I recommend you stop by, look at some of her videos, go subscribe, and then wait for the notifications, and then watch them. Once Robin gets going on what she's talking, she's going to go and give you a lot of details. And it's going to be like you're sitting in her office having a little chat with her, because she's going to give you all the details, the good, the bad, and the ugly, case studies and examples. She's got some spreadsheets she's put together to say, hey, how uh, retiring at 62 with $500,000, how it will hammer your account. And what she was showing is taking historical returns and using this. So you have this much money after this year. Okay, now you got a down market. Now you're taking out more, and actually showed how if you took it too early, you can actually run out of money in the your golden years, your slow go years, when you really needed additional help. You can't do things around the house anymore. You need to pay people or go into long-term care or things like that. Okay, so we're featuring your rich auntie. I recommend you stop by, subscribe, and she gets to going on, and her stuff runs for quite a while, so you're going to learn a lot. She's got a whole series, and I've been watching her and picking up some good information, and it also helps me fact check some of the stuff that I'm talking about. and I like to think I'm on point. Okay, so this is John, and we're going to go ahead and end this meeting, and I will be back on shortly, and we are going to take something that I really want you to come back for, and that's going to be filing your taxes when you ain't got no job and you're pulling from your retirement account. So I'm going to show you how you can pay almost or very little taxes. Okay, so this is John, and we're going to go ahead and end the meeting. Thanks. Give me some likes, shares, and some comments. Anything you want me to research, please let me know and I'll do my best. And thanks.